2026 will remain challenging for the DeFi and the crypto industry. What's happening right now is most of the attention and most of the capital is attracted like a magnet to the AI trade. We need to let this AI trade to cool down for the liquidity to rebalance around the different asset class. 2027 coming is probably gonna see the market rebalancing and crypto coming again into the main conversation. What I'm excited about is to see the number and the caliber of the players coming and investing and launching new products in our industry. From BlackRock, Fidelity, all the major Asian players. Here in the UAE, the kind of new licenses and new players also expanding their offer in crypto via stablecoin, via ETF on Bitcoin, on Ethereum, on Solana. Those news keep piling up. When those companies are investing into new products and new asset class, they've been doing so much due diligence. So I'm really bullish on the market, not for this year, but the foundations are being solidified.
Welcome everyone to Beyond the Cosmoverse. I am your host, Roberto Cassa, Marketing Director at Cosmoverse. And Cosmoverse is a digital asset summit with our 2026 edition coming to Hong Kong this November alongside the Hong Kong FinTech Week. In our previous conversation, we started to explore the Hong Kong ecosystem with Florian Spiegel, CEO of Evident, and in that conversation we also started to tap into the financial corridor between the UAE and Hong Kong, especially in 2026 because the Central Bank of UAE joined the Hong Kong Monetary Authority Money Markets Unit, which means that investors in the UAE now have access to the mainland China capital markets through the Hong Kong financial infrastructure, which deepen the relationship between the UAE and Hong Kong. And today's guest sits exactly between both jurisdictions, having worked with the Hong Kong government at Invest Hong Kong, and now being one of the leading voice of the digital asset ecosystem in the UAE. It is my pleasure to welcome Charles Dossi, CEO of dYdX Foundation. Welcome, Charles.
Thanks for having me, Roberto. Excited about this conversation.
Okay, Charles. So you definitely have a very good experience in the Hong Kong ecosystem because you were working directly for the government as head of FinTech at Invest Hong Kong. And that experience gives you a perspective of how this jurisdiction operates. And what I would like to understand is this narrative arc of your story.
Absolutely. Eventually, I spent 20 years of my time or close to it in Hong Kong. I started in the private sector. I started my own company. I sold this company a few years after. Later on, moved into FinTech. And then was invited by the Hong Kong government to join as head of FinTech and essentially build up from zero this FinTech practice across the government, helping some coordination with the regulator, some coordination with different countries and representations of the Hong Kong economic ecosystem throughout the world. And then I came back again into the private sector. So I come from the private sector and this is more where I belong. But I was extremely curious and I saw that there was some interesting building to be made and at least to be experimented on the public sector. So I joined Invest Hong Kong and I helped essentially to design the FinTech strategy of Hong Kong. The different verticals FinTech effort should be kind of leaned on. Should it be payment tech, regulation tech, blockchain, obviously, and some others. And in that context, I met probably 1,000 companies and eventually helped about 400 companies to expand their operation in Hong Kong, creating thousands of jobs. I was also the organizer of the Hong Kong FinTech Week and co-creating it with the early pioneers of the FinTech space over there. And in that context, I had the chance to spend quite some time with some blockchain entrepreneurs. One of them was Joseph Lubin, the co-founder of Ethereum and founder of ConsenSys, which eventually I joined ConsenSys after some time. Took care of building the Hong Kong office, later on helping with all the Asian operation out of Hong Kong, Singapore, Australia and Japan before doing some global business development with ConsenSys. And eventually expanded into dYdX where I am today.
That transition is actually interesting. We are currently in touch with the Vice President of FinTech at Invest Hong Kong, and we can see that right now there is a very strong focus on blockchain infrastructure and digital assets that in Hong Kong is virtual assets. I'm curious if when you were head of FinTech at Invest Hong Kong, already at that time, so 2019, there was an interest in blockchain?
There was some early, the industry of crypto have been going through a lot of up and downs and through a lot of education cycles, right? So to answer your questions more precisely, in 2018-19, crypto was not welcome. Blockchain as a technology slowly started to made its path through conversations and offices, but crypto was not welcome. And this has been evolving over time. This is the result of the work of many different companies, many different pioneers, helping people to understand the technology, helping to be a steward of the right side of the industry, not going into scams and quick money schemes, but really building the technology and building modern finance. And that's really eventually kind of brought progress into the conversation. And now you can see in Hong Kong, crypto ETF, you have licenses for virtual asset services provider, you've got custodians and custody licenses, stable coins have been launched also in Hong Kong. But back in the days, it was hard conversations to have, to be honest with you. What we did at ConsenSys was obviously helping all those regulators and key stakeholders within the Hong Kong ecosystem to understand the value proposition of blockchain and to let them practice the technology on the topics and on the angle they'd like. So in that context, for example, together with the team of ConsenSys Hong Kong, we built the first iterations of the project mBridge with BIS, and it was essentially 6 different central banks building on the top of Ethereum, not the public permissionless chain, but essentially building a private instance of Ethereum between their different central banks to start essentially building the first versions of CBDCs, wholesale CBDCs for cross-border use cases between the UAE, mainland China, Hong Kong, Thailand. I think Australia was part of it as well. So many different countries were essentially joining those efforts, built with the team of ConsenSys Hong Kong.
From ConsenSys, which is a company that is centered around Ethereum, you made another interesting move, which was diving even more deeper into the decentralized world. Because what I found fascinating from your journey is your ability to actually going way early where the market will actually go. And moving to dYdX was a move towards building a decentralized exchange and perpetual. So why did you actually start that more entrepreneurial journey and starting to build dYdX?
Within ConsenSys, I've learned to essentially deploy the technology for many different use cases. And the Ethereum stack was very interesting, but it was kind of following one philosophy or one assumption that there is essentially one layer, and this layer essentially hosts multiple different applications. In the context of 2021, the technology was I've made progress, but it was not like best of the art and still giving some kind of constraints to projects. So when I had the opportunity to join the team at dYdX and lead the dYdX Foundation, that was an opportunity for me essentially to double click on not only thinking of the stack and building infrastructure, but going into one use case, which is essentially decentralized finance and the trading protocol of perpetual, that is dYdX. And also dYdX at the time was essentially building the early days of their app chain. And an app chain was something new and experimental back in 2021, essentially taking the view that shared infrastructure for everyone and all use cases shows some restrictions to some applications which can be leading their category, and an app chain will make sense in that way. So that's why together with the community, we built the dYdX chain, which was essentially a chain dedicated to dYdX and built and tweaked for the dYdX use case, which is trading perpetuals in a decentralized manner. The app chain brought the opportunity to get really like a Formula One infrastructure for one use case and one application, dYdX only.
Coming back to your Hong Kong period, in 2021 you wrote Block Hong. I am an author myself, I published 2 books. One thing that I know is that when you write a book, you start from your own knowledge, but then you also research and learn more through the process, you connect with more people. So what writing Block Hong teach you about Hong Kongers and the builders of Hong Kong?
The idea of Block Hong came to me while I was at the Hong Kong government as head of FinTech. But the rules of a government are many, And essentially, I could not start this project while I was at the Hong Kong government. So when I left the Hong Kong government, during a series of kind of farewell meetings with officials and secretaries, I remember talking to one secretary and telling him, you remember this idea of book illustrating the talent of the ecosystem, of the crypto ecosystem in Hong Kong? This idea of a book, I want to bring it to life. And now that I'm leaving the government, I think this is going to happen. And I remember the secretary telling me, you're free now, Charles. Go for it. So I listened to my heart and listened to the kind of encouragement from the secretary and went for the book. And on the way of writing this book, eventually I kind of came back to a friend of mine, which is a journalist, James DeBiasio, and we decided to team up for writing this book together. And the goal was to document the journey of people, the journey of those pioneers, entrepreneurs, high impact people, should they be on the private or public sector, and thinking the technology is very hard to document because it goes so fast, but few people are explaining like why some people are early in the space, why some people decide to basically keep fighting for moving their project forward, even though sometimes it's a little bit an adversarial environment. So the journey of people was very interesting to me, more than the technology itself, because it's constantly evolving. And I wanted to kind of also give back to the ecosystem of crypto. And it's interesting for other cities as well to understand how an ecosystem like Hong Kong has been built over the years. So what I learned from writing this book is that the private sector usually lead this kind of new generation of ecosystem or upgrade of an ecosystem from fintech to crypto, or bringing crypto into fintech. And the private sector essentially usually find its ways and its angle to explain to regulators that there is something concrete and of high value behind the technology and the business use case they're building on. And slowly it goes to larger company. It's a slow, long, and painful process. But this is high impact. And what I mean by that, it means like fundraising, it means more jobs, it means more leadership globally for the cities or the countries which are high velocity enough on those topics. And as you know, the world is complicated. Everything is getting faster and faster. So as soon as you've got like the right mix of high integrity, ambitious, and technology-driven private sector quickly crossing paths with regulators, you get a secret recipe for leading the pack on those topics which are crypto, fintech, or modern finance.
And I would say that book now has a lot of historical context, because those are the people that build the foundation for what is Hong Kong today, which is one of the most advanced digital asset framework across any jurisdiction. As you mentioned, with the stablecoin regime, all the tokenization projects that are happening also at the government level, for example, Project Ensemble TX. Another jurisdiction that you are very familiar with, I would say even more familiar, that is probably the first crypto native jurisdiction globally. It's the UAE and Middle East. And you wrote a book last year, Arabian Crypto, which tracks a lot of what is happening in that jurisdiction. First of all, I would like to understand why did you move first specifically to the UAE, but also the jurisdiction that is being shaped in the UAE.
So we relocated to Dubai around COVID, and this is how we ended up there. And I was attracted at the time by Dubai because it's a very new nation. It's a young country, 54 years old only, and it's a nation which is what I call a mini America. And what I mean by that is 90% of the people living in the UAE are essentially immigrants. They come from the Middle East, neighboring countries, they come from Europe, US, Asia, from all over the world. So you've got this kind of energy of new nation building, which is very, very positive. And yes, indeed, the UAE are very, very advanced in terms of crypto regulation, very pro-business. It's very, very refreshing and very surprising sometimes to see how the government can be really engaging with the private sector, very ambitious as much as the private sector is, and are really listening and trying to build things and frameworks which are safe, sound, and compliant, and at the standard of the global markets today, but also very built in a very high velocity manner, very responsive to the market trends, and always trying to be at least one step ahead of every other jurisdiction. So this is what I've helped essentially the UAE to bring over so many different players here. So you find in the UAE like the top executives of any centralized exchange, the top executive from any important decentralized protocol in DeFi. You've got every important players in digital asset or crypto will have a license either in ADGM or VARA. So there is this kind of concentration of activity around the UAE, which is extremely interesting, and it's definitely catching attention. Not the same size as Hong Kong, but the UAE is, in my opinion, taking over on the position of Singapore. I know I'm not going to get a lot of friends saying that, but there is always a challenger, and the challenger nowadays happen to be the UAE with extremely advanced regulation and track records building, which is very inspiring for many.
Yeah, I would say it's definitely been a first mover when it comes to crypto and preparing that jurisdiction for welcoming all these entrepreneur and builder. When it comes to Arabian crypto, after writing Block Kong, which was a first approach to writing a book that basically explain the crypto ecosystem of a specific jurisdiction, what actually led you to do the same for the UAE with Arabian crypto?
The readers of Block Kong lead us to write Arabian crypto. So after moving to the UAE, many friends and many readers from Block Kong were kind of reaching out to me and James, asking like, hey, what's going on? Charles is in the UAE. Tell me more about this. Have you met those guys? What do you think of their new regulations? I had so many questions. So eventually, together with James, we decided to team up again. James joined me in the UAE for some time, and we kind of line up all these meetings with regulators, with key entrepreneurs, with all the people who wanted to get featured in the book and helping us to kind of document new ecosystem, which was getting a lot of attention. So again, I wanted to essentially tell the story of the UAE, not kind of echoing the marketing or the propaganda from any government bodies, but really speaking to the people building it, and the regulators, speaking to the entrepreneurs, understanding like, why did you came here, and how come you're still here, and how come your company has been growing well and sometimes very, very well here in the UAE, and getting the story from people building in asset management, people building trading platforms such as Deribit, which was acquired by Coinbase later on, speaking to very regional entrepreneurs such as the founder of CoinMena, which was acquired by Paribus some months ago also. And all of this was the goal of this second book, Arabian Crypto, was really to kind of give a lay of the land of the UAE when it comes to crypto, and helping executive as well as entrepreneurs from overseas to understand why it's attractive to so many people and so many people in our industry, and what was the journey of each of these entrepreneurs, and hopefully finding a journey which is close to potentially theirs, and helping them to do like the first step and come and expand their business here in the UAE as well.
For sure, regulatory clarity is one of the key drivers for bringing all these entrepreneurs to a specific jurisdiction. And I'm curious about the regulatory framework that there is right now in the UAE, because it's very peculiar, since Dubai and Abu Dhabi have two different regulatory frameworks. Can you guide me through exactly how that model works, and if there is any advantage in having this separate model between the same country but two different regulatory frameworks?
I think you're spot on, Roberto. This is the name of the UAE, stands for United Arab Emirates. So in short, it's a mini USA. You've got like 6 different emirates which are brought together and represent the UAE. So you've got different, depending which state, so to say, you go in the UAE, you will get different regulators. And the two main states which are building on crypto today are Abu Dhabi as well as Dubai. And each of them, Abu Dhabi has ADGM, which is one regulator for this kind of offshore platform within Abu Dhabi for modern finance, and VARA has been created in Dubai to essentially regulate all the virtual asset type of activities. So it's important to understand both of these different type of regulators. Where it's positive, it brings a little bit of competition between the two states and the two emirates on how they will design, how they will attract, and what kind of activities and players they will attract. competition anywhere is good, but it also gives optionalities for the different players in the crypto industry to get a regulator which will will step by step double down on one subset of the industry versus the other. You've got regulators which are also very demanding. Some people still have the picture of the UAE being the World Wide West, where the rules are a little bit relaxed, and you'll find your way always. What we learned writing the book and what I learned being here in the UAE, it's that the rules in the UAE and the regulations are very demanding. Not everyone gets a license at all. The kind of waiting list can be long because so many people want some of these licenses, and they're not giving license to anyone asking, I can tell you. So it takes a long time. It's as demanding as a license in Europe, Hong Kong, or elsewhere would be. But because of this kind of predictability of the country and also the leadership here, the location of the UAE between Europe and Asia, the tax environment, there is a number of functions which allows businesses to flourish here and which attract entrepreneurs from many places. And if you think of any, as I was saying a few minutes ago, any meaningful player in the crypto industry always have either operations in Abu Dhabi or Dubai. It's always the case. Not every country, even though they might be fighting for getting incentive or kind of modern type of regulations, will be able to attract like the top 50 biggest global player in crypto within the country. So this is a big achievement, and this speaks for how everything is well designed, well thought, and essentially appreciated by all these global entrepreneurs expanding their business in the Middle East.
Yeah, I was speaking actually with Florian in our previous conversation, the importance of moving when you're working, especially in an environment which is still in a pioneer industry, to move in a place of growth. And definitely the UAE has been growing in terms of digital asset adoption and the old sector through jurisdictions that are very updated, because crypto move fast, but I have to say that the UAE jurisdiction has been quite on pace with the development of this technology. So if you're looking to move into UAE, I can definitely recommend Arabian Crypto, because it's very important to have this understanding of how the UAE is structured, especially if you are looking there to build a company. And we are also glad to have Cosmoverse mentioned in the book. We appreciate the mention.
Absolutely, Michael is part of the book, and the book will not have been the same without Michael essentially contributing with his own story and his own journey. So if there is one story I recommend everyone to look and to read in the book is Michael's.
We spoke about the Hong Kong jurisdiction, we spoke about the UAE jurisdiction, and I have to ask you now the difficult question, which is, how do you compare these two jurisdictions?
I think Hong Kong first is an older jurisdiction. So what this means is the traditional finance ecosystem in Hong Kong is older, is wider, is bigger. More banks, way larger stock exchange. The flow of money and capital in Hong Kong is by an order of magnitude larger than the UAE. But there is a different value proposition for the UAE. I think the UAE is much more predictable. And if you think about it, having a predictable place to operate your business, nowadays, this is a luxury. Knowing what's going to happen next year, in 5 years, in 10 years, and not being surprised or caught by surprise with a new election, a new leader, a new regulations or something like this, knowing that the jurisdictions is very, very much dedicated to growth and stability. This is extremely important for entrepreneurs, it's extremely important for shareholders, or board members, and this is where the UAE is also bringing some very unique value proposition. In terms of regulations also, because the UAE is probably a newcomer and a challenger in the global economy. It makes them work harder and I think work faster with a more nimble type of ecosystem around them than would be Hong Kong, which is rich of hundreds of stockbrokers, hundreds of banks, and so on. So it's not exactly the same size, but I think in terms of location, predictability, and also in terms of diversity of talents, it brings a very different value proposition. If you come in the UAE, you will see that people are coming from absolutely all over the world. 90% of the population is essentially are immigrants like me, and it creates like a very interesting melting pot, which you will find into the international finance hub. If you go in London, there is only so many Brits. The rest are expats, the rest are people coming from different places. The same applies in New York, for example. And we know for a fact that when you got this melting pot with the right regulations around it and with the right kind of drive from the leadership of those countries, this creates some magic. And I think this is what the UAE can rely on, amongst many other things.
Yeah, the thing that is a parallel that is extremely useful. So thanks for sharing this insight, because these are two jurisdictions that right now, if you're building digital assets, are the most interesting to look at from an entrepreneur perspective. Coming back instead to the US, which is still developing its Clarity Act, but is still that jurisdiction that everyone look at, especially when it comes to the future of crypto. The approval of regulated perps recently by the Commodity Future Trading Commission actually has been, especially for dYdX that is focused on perps, an important unlock. So what actually this change from your perspective?
So the first signal from this kind of regulatory news is that innovation built and brought to the world by the crypto industry is eventually recognized and recognized as valuable innovation by the traditional finance world and by the regulators, which is a very big milestone and a very big encouragement also for all the innovation happening within the crypto industry. So that's number one for me. Number two, this means that more people are paying attention to this type of investment vehicles that are the crypto derivatives, the perps. And if you keep in mind that the derivative markets in general, should it be in equity or in crypto, are the largest market in the world, way bigger than the spot market, it's very important to see that when regulation essentially helps this market to go further and to essentially reach more players, it's a very good signal. So even though some of these perps are being used in a centralized manner by centralized venues, it's overall good to see that the size of the pie expand and the market for derivative is eventually adopting crypto innovation more widely. And I'm sure we're going to see these crypto perps evolving, and we are already, into equity perps and bringing again this innovation we take for a given in crypto, but coming into other key assets such as equities.
That's perfect, because actually what I wanted to ask you is this approval by the CFTC. Who is going to favor more, in your opinion, like the traditional derivative venue or on-chain markets?
It's still unfolding. There is definitely a larger business happening today for the traditional venues because they already have some kind of customers, kind of regulated customers, and it's hard for them to expand into DeFi. But as I said earlier, I think the pie expands. So we see also the numbers, even though we are in a bear market period right now in crypto, we see that the number of participants and the type of participants in crypto venues is also evolving. It's not a market which is mainly driven by retail anymore, but we see many more institutionals starting to feel comfortable with essentially coming and trading in both centralized venues and decentralized venues, and it pushes more competition. So this is why I think it's essentially brings more attention to the DeFi markets in general. When you can trade crypto 24/7, and now you can trade essentially equity 24/7 on decentralized venues. This is something which keep bringing to the attention all the institutional players and all traders in general, thinking that if they have an opinion on the price of oil, for example, on a Sunday, they can express this opinion on decentralized venue. Centralized venues will make you wait until Monday morning. So it's just keep expanding the pie, and I think it's also stimulating the industry of crypto to keep delivering new innovation. And what is interesting is that actually those two industries are really kind of blending now. Equity stocks being essentially tradable as a derivative, as a perp in decentralized venue, and you see crypto perps being also traded in centralized venue. So it's interesting to see that both of the sides are expanding their offering and their total market footprint.
This convergence is actually very aligned with one of the conversations that we had in the previous episode with Bernard Kromfeller from Boston Consulting Group, where he said that right now there is actually a two-lane approach with a parallel run that is justified by the fact that if you are in crypto, you have T+0 settlement, which is immediate, while in traditional rails you have T+1 or even T+2. So the fact that you can have T+0 immediately actually justify the adoption of crypto rails with the current players, rather than building your own infrastructure, which of course takes time. On this regard, where do you see the state of DeFi in 2026? Because there is this incredible contracts that basically every jurisdiction is approving and bringing clarity. If we had this clarity in 2021, it would have been a completely different market, but yet we are in a bear market right now. So where do you see actually DeFi standing in 2026?
I think 2026 will remain challenging for the DeFi and the crypto industry anyway. What's happening right now is most of the attention and most of the capital is kind of attracted like a magnet to the AI trade. And we need to let this AI trade to kind of cool down for the liquidity to rebalance around the different asset class. But right now, crypto, as some other asset classes, are not getting all the attention they deserve. And it's just the whole of the game. 2027 coming is probably gonna see the market rebalancing and crypto coming again into the main conversation. What's happening during the bear market, even though the numbers you see on your dashboards are not excited, what I'm excited about is to see the number and the caliber of the players coming and investing and launching new products in our industry. From BlackRock, Fidelity, all the major Asian players. Here in the UAE, the kind of new licenses and new players also expanding their offer in crypto. Should it be via stablecoin, via ETF, on Bitcoin, on Ethereum, on Solana? Just those news keep piling up, right? And it's important to understand that when those companies are investing into new products and new asset class, they've been doing so much due diligence. Their business plan has been really well thought and kind of vetted by boards and advisory. So I'm really bullish on the market, not for this year, because it's just the forces of the market and the attention on AI, but the foundations are being solidified very strongly. And I think when we will see that everyone is starting to use the technology for a first use case, which is stablecoin, and then being pulled into a second use case, which is trading 24/7, reaching a new dimension in terms of capital efficiency. If you think about this, suddenly you can trade 24 hours a day, 7 days a week, and you can settle your trades in a matter of seconds instead of a few days. You can put your money to work much more efficiently, and this is going to be a no-brainer. Of course, you're going to have earlier adopters, but which will put the pressure and probably what we can call the FOMO on the following adopters of this new infrastructure. But to me, the history is carved in stone. We just have to patiently look at the next chapter. But it's a bright future.
Yeah, this one actually goes way deeper into the main topic of this podcast, which is the digital transformation that is happening right now. Because as you mentioned, all these players that in the past year have been completely outside the crypto markets and keeping themselves very away from it. I'm speaking also of banks, commercial banks, central banks. Now they are agreeing that this technology is actually the future when it comes to rails. And on this regard, do you think that right now it's more institutions that are shaping how this technology apply to capital markets, or it's the technology that is reshaping capital markets?
It's a mix of both, but what's probably happening right now, and people I think are still digesting it, I think the kind of rebirth of the crypto industry will come from institutional. The institutional will move the needles, they will move KPIs, they will move markets in general in a very different way than the retail would be. And I think the technology is helping, but what we see, it's more the asset class rather than the technology per se convincing people. I think a lot of work has been done to explain what is blockchain. When you see your government building CBDCs, when you see your national currency moving into stablecoin, I think you've got like a demonstration that the technology is working. What we see happening more, it's number one, the asset class, the crypto asset class. Think of the crypto majors. I think these ones are now accessible via traditional players, crypto players, via ETF, via options programs. There is so many different flavors of the crypto asset class, which can be consumed in so many different ways, in so many different rails. That's one thing. And the other thing is that the market, I think, has started eventually to understand that beyond the use case of stablecoin, which is yet to show its full potential, stablecoins are still tiny, about $300 billion. And suddenly, I think we're going to see them popping at 500 and a trillion, of course. But this first use case illustrates what can be done also to equities, what can be done to capital market in general in terms of efficiency. All these things we've been preaching for years are eventually being demonstrated and starting to be adopted by early adopters within the world of asset management, within the world of payment or lending. And as soon as you start to kind of open the door and some people start building with these technologies, the other one are kind of rushing to catch up. If you sugar top this market momentum and this adoption, which is happening before our eyes with progressive regulators, such as the UAE or the current administration in the US, is just essentially fueling and accelerating this growth and the cadence of progress with that. So I think the market of DeFi and the market of crypto in general will be led by institutions, because eventually the regulation came and the institutions are ready and they are building. And it's not only like wishful thinking. We could go for hours on list of initiatives, of product being launched, on all these things. It's really concrete nowadays. We just need to have just the kind of market and liquidity being redistributed more equally between the different places in the economy.
I think this is one of the key takeaways, especially for 2026, because we are in this phase where basically the technology is now going into the background. So you don't need actually to sell the technology as a product, because you have already institutions that are operating and looking to operate on chain. And this is truly the key transformation. Even when you do a bank transfer, maybe it will be on chain, but you will not be aware because the technology is ready. So this is the time where it goes into the background. And on this regard, now that there is this broader transformation in the industry that was still built by the crypto natives, where do you think you are from a positioning of launching your product, in this case a perpetual DEX, on Ethereum or a layer 1, compared to actually owning your rails and launching your own blockchain? Where you are today on that thinking?
I think having your own infrastructure is eventually giving you kind of control of how your infrastructure will evolve with your business, right? When you build your own chain for your own application and your own use case, it comes also with a lot of responsibility, and you cannot rely on some other teams or some other engineers to kind of maintain Ethereum layer 1 or any layer 2s or some other layer 1 technologies. So there are trade-offs, but eventually what you see is that the biggest players in any industry will always try to essentially build and kind of control their full stack, right? As much as possible. You see that, for example, in the world of payment, where stablecoin issuers have started on public permissionless networks, of course on Ethereum, of course on Solana, and so on. And what are you seeing now? You're seeing Circle launching their own layer 1. You're seeing Plasma from USDT and Tether launching their own layer 1 as well. So there is always this conversation and this narrative that, okay, building your own chain is complicated. It is. It comes with a lot of responsibility again, but it also gives you control and give you control of the full experience for your users and for your business, which is always beneficial, I think, in the long term. So we will keep seeing, I think, both sides of the architecture philosophy, and probably some use case will will sit better on a public permissionless chain, and some other use case will sit better on a chain dedicated to an application, what we call an app chain. Exactly what we see with the payment world. You and I might be essentially transacting on Ethereum layer 1 or USDCs, but maybe some traders and some use case for capital efficiency or maybe for compliance will be happening on their own chain, because it just requires like a certain type of compute or a certain speed of full settlement, and this can be done only on a specific type of environment.
What is the one thing that operators working into industry should look at in 2026? Because you have a lot of knowledge, you have an understanding of the regulation across multiple jurisdictions. You have built and you are building at the center of the innovation in a decentralized exchange focused on perpetuals. What is that one thing that do you think operators should really look at in 2026?
Everyone have different views on that, but what is very close to my heart and what I've seen working over the years is when you focus on distribution, when you really think how your product will reach users, and where people are spending hundreds of millions and spending days and years of manpower, and later it's going to be agents, will be essentially to convince users to join their application. And where I see winners and where I see our industry evolving is distribution will be able to get a product in the hands of users. So it's a little bit like if you think of you and I launching like a t-shirt brand. Of course, we can have our own .com and robertotshirts.com and trying to bring people to this website and to buy your t-shirt. But maybe we should also think and saying, okay, why don't we put those t-shirts on the shelves of Amazon or on the shelves of Taobao in Asia, and essentially get the distribution. Of course, you have to share your revenues, but this makes or break a lot of different projects. So yes, the technology is important. Yes, the product is important. And this debate, I don't think has really a firm answer. But I've seen people doing really some magic, thinking about distribution, thinking about partnerships, and I think a lot of people will experience crypto and decentralized finance without going through the user journey the founder or the product manager is thinking. Many of them will be on their bank or within maybe a payment wallet, and they will be offered to park their money on Morpho or maybe take a position on a derivative contract. And this is going to be easier for them this way. So distribution to me is like extremely critical, and not enough people are thinking deeply and executing on it.
Execution is a big part of the whole process, and really thank you for sharing this insight with me today, because I think that just by listening at this conversation, there is a clear understanding of how we are in 2026 in terms of from an industry perspective, but also how jurisdictions are moving globally. So thanks a lot for sharing this insight with us today, Charles.
Thanks for having me, Roberto, and see you at Cosmoverse.